pound strength, yen weakness, euro dominating, and gold is still trapped. What's in store for next week, traders? Well, today I'm going to share some of the best setups from last week. I'm going to go through 12 pairs with you today, and they would include gold and USD Swiss Franc. One thing I want you to have in the back of your mind going into the last week of the first month of 2021 is have belief in what you see, not what you want to see. I'll say that one more time. Have belief in what you see, not what you want to see. So let's start and go through these 12 pairs today. And I've included USD Swiss Franc because I know some of you have wanted to see them. So taking a look at pound USD, we saw pound strength last week, especially from an intraday perspective, going down to the hourly time frame. We can see a beautiful trend here to the upside, making higher highs and higher lows. If we're looking to buy in this market, what do we need to do? Well, we first need to identify the momentum shift, meaning pushing to the upside. Once we identify this, then we can start scaling down. Now, the week started around the 17th, but if we take Monday into account, I believe it was the 18th. Let's go down to the 15-minute time frame, take a look at the markets from the start of the week. Now, the way we want to look at this is the structure of the market, pushing to the upside. You want to make sure you're seeing price breaking above key levels in the market. You want to identify the trend to the upside. Then you're looking for your retest levels here, as you probably can see. When we draw in our little area, remember it's an area. You're looking for price to break above structure, come back, retest. Then you're looking for a trading opportunity. Entering above here is completely fine. Stop loss below the structure is completely fine. Entering above the engulfing candle is completely fine as long as your stop loss is below. If we went for a 1-to-3 risk reward ratio here on these buying opportunities last week, we definitely would have absolutely destroyed take profit here. And let's go for our final trade, 1-to-3 on this. If we went for the breakout above the previous structure high, we would have definitely smashed take profit there. Some really good trading opportunities here on pound USD going down to the hourly time frame. Just simply analyzing the structure of the market, being bullish, breaking above key levels here, identifying the momentum shifts, and just getting into some of those trades. So what's in store for next week? Well, at the moment, we're identifying that the pound is more dominant. In terms of the dollar, it's not doing much across the board. So for now, we're just going to stay away from it. What we're going to be needing to see next week from a 4H perspective, so from a higher time frame perspective, is to see price break above some of these key levels here. Now, don't draw this level in because you want price to have broken already. We want to see price really breaking above, leaving this area, coming back, and then looking for trading opportunities. My plan next week, if we're going to continue to see pound strength, is to see price breaking, closing above these structures, some sort of retests, and then some sort of continuations. If this doesn't happen, then I'm patiently going to wait. If there's a reversal in the market, then of course, I'll take advantage of that as well. But for now, while price is still respecting some key levels here, as you probably can see from the left, these structural lows, I'm going to stay patient. If the markets do decide to violate these structures, I want you all to recognize one major factor here, that the markets in theory are still sitting within a range. So don't be too quick to sell the markets because we're not sure how far this is going to pull back, especially with this bullish sentiment and price making higher highs and higher lows here. But what we can identify is that if price starts to break and respect these key levels here, we could come back down to some of these lows. So that is something to consider. But in terms of the overall market sentiment, I still feel we're more bullish than we are bearish. So I think the first plan of action is to see a good, strong break above this level, look for a retest, and then some sort of continuation back to the downside. The next pair that we'll take a look at is Euro USD. Now, we've seen the euro dominating across the board, and to be honest with you, I'm pretty surprised by it. Now, since the markets opened around the 17th/18, you can see we've had strong bullish moves. Let's go down to our intraday timeframes and identify this, and you can probably see here, we had a really, really nice rally for quite some time to the upside here. We had a really deep pullback in this market structure, back down to some of these major wick areas here. So where it previously broke the highs after being trapped in a consolidation, we broke above it, we come back, respected it with a strong bearish candle into this level, and then immediately a reaction from the bulls pushing this market up. And as you probably can see, we've had a continuation. Now we've got two opportunities to get in here. we have this overall trend to the upside. We have this trend to the upside. Let's go down to, say, 30-minute time frame. So looking at the structure of these markets here, we had a breakout. I can't say that this would have been the best entry, but let's say if we went for one of these, close of this bullish candle here, stop loss below structure. We're trying to go for a 1 to 3 here. Did we make it? We probably didn't. So if we took one of these trades, I guess once price starts to get this close to our take profit, you're locking this in at break even, and I think we would have been robbed of a trade there, but that is completely fine. Moving on to another opportunity. Once price had a deep pullback into that breakout level there, we see a strong bearish sentiment deplete, bullish sentiment step in, levels where price was failing to break above here, and then what did we see? Price left, came back, retested that structure, strong bullish candle. Let's say we went in after the close here with a stop loss below some of these key levels. Did we hit our 1 to 3 on this one? Oh, probably not. But there you go. Two opportunities here, especially for you 1 to 3 traders. If you're going for 1 to 2s, then you'd have definitely destroyed the markets here in Euro USD last week. And then if not, you know, you're probably still sitting in this trade. But what's in store this week? Well, to be brutally honest, there is nothing to indicate dollar strength yet. There's a lot to support euro dominating the markets. For that reason, I will say I'm more bull bias on this structure. And what I would want to see with this is price breaking above some of these key levels. Now, if it respects it, let it be. But if not, I'm looking for price to break above these key levels. Strong break, allow for price to leave. When it's ready, come back, look for the retest, and then support a trading opportunity with wick rejections, bullish candles, whatever else you're looking for as part of your strategy, and see if we can continue pushing to the upside. As I said, if you look across the board, euro is dominating. Dollar is not giving us any real evidence yet as to why it should be strong. So I think for now, we'll continue to look for buys. The next pair that we'll take a look at is yen or USD Jpy, and the yen has really not been doing too well across the board. Now, if we look at the structure of this market from, let's say, a 12-year-old's perspective, we probably could gather that the market is moving sideways. I would say that I'd probably support dollar buying at this moment in time as opposed to selling, but I will say there's not clear evidence here of a really nice trending opportunity. The markets have been up and down within this consolidation. So I think for now, we'll leave this as a consolidation, wait to see what happens with the dollar. If it starts to pick up strength, then maybe looking for some buys. And then obviously anything can happen overnight in terms of the yen, but I think we'll just have to wait and see what happens with this one. The next pair that we take a look at is Euro JPY. Again, we're seeing JPY weakness here, and we're seeing the Euro strength. So the market started around the 17th, and as you probably can see at market open last week, there's a really strong push to the upside. Now, we probably could have been supporting a downtrend here last week because we were suspecting the Euro to continue showing weakness, but clearly towards the later part of the week, we can see that price started to respect some of these lows here, and now we've had another rally to the upside. Scaling down to some of our intraday timeframes, let's take a look at maybe the 15-minute time frame now, or actually, in fact, the 5-minute time frame. Let's take a look at what we see from the start of the week. We had a really strong euro push to the upside. Now, in terms of structures here, I don't see anything too clean. I'm not sure if you're seeing something that I'm not seeing, but we can see it has been making higher highs and higher lows. Tradable opportunities on the 5-minute, I don't think presented itself too well over there. And then for the final push supporting the euro as opposed to the yen, identifying that weakness. I mean, this time frame, and I'm on a small screen while I'm at my home office, which is pretty annoying. Let's go to the 15-minute time frame and see what's happening over here. So a couple opportunities we're looking for is for price to break above structure, retest those structures. Is that a little bit too far? Could we call out a double bottom pattern here? Maybe, whatever. Price fading to break above structures here. We can see price breaking above, leaving, coming back, creating some sort of double bottom patterns here. Or a little bit messy here on Euro JPY. Anyway, no trading opportunities to have a look at on that one, or the cleanest at least. Now, in terms of my overall bias or my sentiment or my opinion, I think I'm only going to stick to buys with Euro JPY moving into next week. We can see price was in a downtrend, failed to make a new lower low after the lower high was formed here. And as you probably can see, We're just breaking above some of these structures. I wouldn't classify this as a real break above, but we definitely have broken above. And I think some of the plans next week will be looking for price to slightly leave this area, come back to this area, and then look for a continuation. Or if it continues to start creating some sort of uptrend, then it will just be a higher low continuation back to the upside. While this is in a push phase, I think I'll be waiting for the markets to build up a little bit more. I still do think that I much prefer to support euro as opposed to the yen right now. So I think my bias being buy bias is completely fine in this instance. And again, I'll just be waiting for the market to create some levels to work with to support why I should be buying as opposed to just buying now just for the sake of it. So I think we've got a patient game here. If you're analyzing the markets, make sure you're doing them daily so that you can get a true bias of the market's behavior and structure. The next pair that we take a look at is pound JPY. Now, again, we have seen pound strength this week. Comparing this to pound USD, the pound hasn't really kicked in with momentum as much as we probably should expect it to, considering that the dollar's not really showing much strength and the yen is weak as well. But, you know, from an intraday perspective, we can see that since the market's open from around the 17th, the market has been creating higher highs and higher lows. From an hourly perspective, we can definitely verify that. And I mean, even though it's not the cleanest of trends here, I think no one can really argue the fact that price has been pushing up. If we go to the 30-minute time frame and take a look at this, we've had price continually respect the brick wall here, trading above it. Trading opportunities here, I don't see from an hourly 30-minute perspective as being the easiest of opportunities, to be brutally honest with you. But I mean, I'll leave this one down to your strategy. My bias on this is buy bias. There's nothing to support sells right now, even though we're not breaking above some of these structure levels. In my opinion, I think in order to look for sells, we're going to need a full break of some key levels here, structural higher lows. We're going to need the brick wall to be broken, and then price to pull back after the push phase to look for some continuations. So I think, you know, there's too much story that needs to go into that to support why we should be selling. I'm sticking to buys. I'm waiting for the breakout. I'm waiting for the retest, and I'm looking for the continuation. Next pair that we'll take a look at is Aussie Dollar USD. Now, I don't really fancy buying or selling Aussie Dollar. They've had some good news in terms of their employment rate, in terms of the overall structures with any currency versus the Aussie dollar. It hasn't been doing too well. Now, you probably can see from the majority of the pairs that we're looking at, the markets are very rangy. Just to assure you all that this will start changing again. There is a lot of uncertainty coming in from 2020 or transitioning from 2020 to 21. January is more like a December month, so it's kind of slow. You will start to see volume picking up, more clearer trends forming, and I reckon February is when you guys will be able to start seeing the momentum that you've been looking for. As of now, just continue to manage your risk. Make sure you're not giving away too much so that you can capitalize when the time is right. For now, I would say anything versus the Aussie dollar, you're probably looking to buy or sell. So at this moment in time, I do recognize that the structure of this market is very rangy, but I say I would much prefer to sell this as opposed to buy this. And I mean, it's really down to you. I don't understand. Well, I don't understand. I'm not sure how advanced you are in terms of your technical analysis and being able to identify structure and behavior. So for the simple plan, it will just be a break close below the structure, retest, continuation. And in terms of intraday trading, I'm going to leave that down to you. I'm not going to go into too much details about that. But if we suspect price to come back to some of these lows here, then you probably could be looking for price to break some of these levels, looking for certain patterns, and yeah, whatever else. But this is, I think, a simple plan, keeping it simple, having belief in what I see, not what I want to see. And I think I support sells rather than buys on this pair today. The next pair that we'll take a look at is USD Cad. Now, the CAD has not been doing too well as the Aussie dollar. So again, I think based on the information, even though the structures of this market are very rangy, I would much prefer to buy the dollar as opposed to sell the dollar. A very simple plan, not thinking too much about this, is a break, retest, and a continuation to the upside. Again, intraday traders and scalpers, I'm not going to go into too much details about how you can trade within these ranges. There's plenty of videos on my YouTube to help you break down some of the processes, principles, and concepts that I use in my own trading to be able to take advantage of identifying CAD weakness, Aussie dollar weakness, and then even though we're not supporting the dollar, still buying it versus some of these currencies. So go and take a look at those YouTube videos. I'm promoting them because they're fantastic and I think you'll learn a lot from them. For now, I think this is a simple plan, and move on to the next pair. Euro, Aussie dollar. So Euro has been dominating. Now, the structure of this market, well, let's say for the first 2 weeks of this month, I could even say for the first, 2 weeks of this month, Euro was not doing much. It was very easy to trade against the euro in the first 2 weeks of the month because it was weak. We see the trends to the downside were really strong, or to the upside, they were really strong. But what we can start to see now is a depletion in these trends. Maybe, just maybe, is the euro starting to recover? Well, what we can see here is the downtrend is starting to deplete, meaning that the euro is definitely showing some signs of strength here. Then the market opened around the 18th. We can see the market came back to some of these key levels here just at the start, and then euro came in, woof, straight to the upside. Strong pressure, bounce off of this key level. Lower low wasn't made. We have a nice intraday trend here. We can go down to, let's say, 30-minute time frame, and as you probably can see, the market is putting in work. Beautiful high highs, higher lows, breaking above some of these key levels here, coming back to respect these key levels, trading above the brick wall. Wherever you want to enter, I really don't care, guys. Stop loss below structure, going for your 1 to 3 target, and there you go. Bob is your uncle on that one. Nice, simple trade. Not every pair you're going to get a trade on, but when they declare themselves, they make themselves clear. Guess what? Get in the market and make some money, baby. So what's my plans with Euro, Aussie dollar? Well, I'm not supporting the Aussie dollar because I've already identified that it's not too strong. And I also know that the euro has been dominating. So I'm going to want to see clear structure to represent this trend. I want to break lows above this structure. Once I get that evidence, then I'm just looking for my basic retests and my continuations. Now, notice with the analysis, looking over some of the pairs you could have traded this week or setups you could have traded this week, there hasn't been many. But the balance of finding the ones that are the cleanest, the easiest to identify, you definitely could have made a buck or two. So my plan with Euro Aussie dollar is this: wait for the break above, let price leave, come back, retest, and then see you later, alligator. On to the next pair. New Zealand dollar USD. Now, with the structure of this market, it is in a range. Okay, don't overlook that. Moving from slightly to the left to the right, it's been ranging. We've had spurts of price rallying to the downside, then corrections to the upside, rallies to the upside, corrections to the downside. I personally don't know much about New Zealand dollar, to be honest with you, but what I do know is based on the structure of this market, I would support more sells than I would buys, even though we've had this rally. This move here makes me think more impulse, news inflicted, or something going on in the world sort of thing. And if this is going to continue to push up, then what I suspect the market to do is make a higher low, break above to make a new higher high. Now, it didn't do that. It attempted to break above this level on 2 occasions. And we're not talking about 2 minutes worth of information here, guys and ladies. We're talking about at least 16, 20, 24 hours worth of information that price tried to break above and failed. Now we're starting to move back to the downside. So I would say here, if the markets are going to continue to push up, we shall see this break above structure, a retest, and a continuation. And if the markets are not going to continue up, then all I'm going to want to see the markets do is break lows below these levels. This is not the break just yet, but then see price leave, come back, retest, and then look for some targets back to the downside. Now you might say, well, Rox, are you trying to cover yourself here, my friend? Well, let me tell you something, George. Not really. Because this is not a clear trend, I have to work with behavior. And until the behavior presents itself, then I just have to wait patiently. So this is my plans. The next pair that we'll take a look at is Euro, New Zealand dollar. Now we're starting to build a picture here, right? New Zealand dollar has been very strong. We can see here versus the dollar. New Zealand dollar have been pushing to the upside for quite some time here. How much? Well, not too much, but enough. And then we started to see some sort of depletion in the strength there. Here versus Euro, New Zealand dollar, this is easy to understand why it was pushing down more or trending down more than it was bullish, because obviously the euro was weak. But now we're starting to see a depletion here in this New Zealand dollar strength because the euro is showing that it's not allowing price to break below some of these structures here. Okay. Now, if the market was still trending down, euro was weak and New Zealand dollar was strong, then what would have happened by now? We would have broken close below this, key level. We would have seen some sort of pullback retest, and then we would have taken the continuation. But it hasn't happened. We know euro has been dominating. So for that reason, I would say to you, my plan will be this. Price has broken out of this structure and broken back in immediately. Now we're reacting to this level and have been reacting to this level for around 12 hours. If I'm looking to take a trade, I'm going to need to see some sort of fire in the euro. And I want to see the momentum kick back in. That momentum will have to look like this. Then I would need to see a retest, and then I could target maybe some of these structural highs for potential break-even trades. And then once I have a safe trade, I have no risk on the table, then we can start thinking about targeting some of these highs over here or some of these major highs over here. First plan though, I need to see the bullish momentum kick in. I don't want to take a retest of this level, even though it would make sense from a range perspective. I just want to see the euro take over, break above this key level, retest it, and look for a continuation. Now, just a disclaimer for anybody watching this, the analysis is for about, what? The analysis should be done on a daily basis as the market sentiment, behavior, and structures change constantly. I don't get paid to be an analyst, so I don't care whether price goes to 7,200 or whether it drops down to 6,700. All I'm focused on is the immediate behavior and structure of the markets, identifying momentum, and then getting into trades when they present itself. So this analysis is for 24 hours, maximum 48 hours, and then I'll reanalyze the markets again. Next pair we'll take a look at USD Swiss Franc. Now, we haven't done a Swiss Franc pair for quite some time, and to be honest with you, I really don't like this pair, but I saw a comment under the YouTube video and said, Rocks, what happened to USD Swiss Franc? Well, here we go, George. This is USD Swiss Franc. We have a structural high, structural low, one tap, two tap, you go like this, and now you identify it as a range. Now we're starting to see here Swiss Franc strength last week from around the 17th, price respecting key levels, pushing to the downside, showing signs of bearish sentiment. Then we have a slight break here. Now, is this really a break? Don't think so. I think what we're going to need to see if this bearish sentiment is going to continue from this key level down. I just want to see price leave for a little bit longer, eventually come back, retest, and continue. Now, this means that I'm backing against the dollar here, which is kind of crazy. But again, we haven't seen much evidence to support dollar strength. So I guess at this stage, we'll just follow price action. So it is rangy. Price is still stuck in a range. Actually, in fact, let me make sure that I cover myself for all the bobs out there. And there we go. This is how we're going to look for the break and retest. If not, we're rangy, guys. Just wait for cleaner structure. We'll move on. Final pair we'll take a look at is Goldilocks. I don't know what's happening with Goldilocks here, to be honest with you. We saw strong sentiment, bearish sentiment last week, Sunday. We was looking for the break below the structures here. And as you probably can see, it really tried its best and completely failed. Now, in terms of the overall sentiment with the dollar, there's nothing to support strength or weakness. There's more of the evidence that we can gather is uncertainty. If there's uncertainty, more than likely investors are going to put their money where in gold, right? That's where they're going to put their money, meaning this should go up. If for some reason the dollar does start to strengthen, then this consolidation will hold and eventually we'll see the breakout of the structural low. So I'm going to leave those thoughts with you. I personally think, looking at what's happening, if the dollar was going to show its strength, start to dominate, then I think we would have seen the break already, to be honest with you. I think we would have gathered more evidence across the board, but we're not. So I think I'm anticipating this to go up, but that's just a wild guess. But it's not wild, it's calculated. That's my perspective. As Gary Vee says, I got my perspective, you got yours. Okay, guys, so that's my analysis. So what am I identifying? I'm identifying pound strength. Again, uncertainty with the dollar. Euro USD. Euro is dominating. Dollar uncertainty. This is why I'm thinking up. USD JPY. JPY has been weak. This is rangy, so there's no clear directional bias. But with yen weakness or yen not even showing anything at the moment, I think I'd much prefer to say if this is going to continue in this range, then the uncertainty with the yen and the dollar will support this continuing to go sideways. If all of a sudden the yen just totally goes weak, then we'll see it bounce off of these lows back to the upside. And then if the dollar strengthens, we'll see this rally up. Now, there was too many scenarios there. They all make sense. That just probably means don't trade USD JPY. Next pair we'll take a look at is Euro JPY. Now, the reason why we've gone for this analysis is because we have identified yen weakness. We know that the euro is dominating. So a nice higher low, break higher above this key level, retest continuation is a fantastic opportunity. Pound JPY. Now, pound is strong. Yen is weak, meaning I much prefer to support buys rather than sells. But I do need pound to start moving because for some reason it's not moving as much as we suspect it to. It's not breaking above highs on pound USD. It's not breaking above highs on pound JPY. And I mean, it is really high at the moment, but come on, pound. Put in some work. Now, Aussie Dollar USD. Unfortunately, Aussie Dollar is not showing anything. Good rates, but still not showing anything. And I think we'd only have to support USD right now. This is rangy, so it could bounce from the lows back to the upside. It could fly to the upside, but I think just a simple analysis for 24 to 48 hours, I think I much prefer to put my money on the dollar, given the evidence. Also, USD Cad, again, we have seen that Aussie Dollar Cad have been weak, meaning I much prefer to put my money where the dollar is. I think I'd need more evidence or a breakout retest continuation on this one. And obviously, Euro, if I've identified Aussie Dollar weakness or no strength at all, not even necessarily weakness, just no strength at all, but I've seen that Euro is dominating, I much prefer to look for buys on this with a breakout and retest. New Zealand Dollar USD. Thing is with this, dollar hasn't shown up yet. And to be honest with you, New Zealand dollar has been strong recently, especially like Euro against Euro New Zealand dollar. So I personally would say either or could happen right now. It is super rangy. If it's going to continue up with this bullish sentiment that we've seen this week with New Zealand dollar, then we should see a break above the highs first to confirm that and a retest. And if we're just going to continue ranging from an intraday perspective, ladies and gents, we can just look for a break below the structure retest and a continuation. Euro New Zealand dollar, I think we'll be looking for buys here. I mean, this looks like Petros, to be honest with you. Let's remove this and let's remove this. I think the best plan of action is to see a break above this level. I would disregard the behavior here of this. I wouldn't disregard it if you enter a trade. But in terms of should we wait for price to break above this, I don't think it's necessary. As long as you have enough range here back to the highs, if buying, to go break even and lock that trade in at risk-free, you should be fine. If you are a bit skeptical, then ladies and gents, just wait for the break above the high, look for the retest. But I think at the moment, I'm still supporting the euro. USD Swiss Franc, I think I'm going to be supporting Swiss Franc here. USD, I mean Swiss Franc. No evidence here of the dollar breaking the highs. I just think that there's been a lot of bearish sentiment to support this break in the lows, retesting and continuing down. It may not, it may just range. And then for gold, I guess flip of a coin. I personally don't see any evidence of why dollar should or investors will start investing back in the dollar right now, especially with the uncertainty with what's going on in the US. And I'm sorry that it's happening because it is it's a problem. So maybe investors, are you putting your money back in gold anytime soon? Maybe, maybe not. I don't know. So that's my analysis on those pairs. I hope you have enjoyed it. I just want to wish every single one of you a fantastic weekend. I want you just to put things in perspective and just remember we're going into the last week of the first month in 2021. Guys, ladies, gents, you still have 11 more months to go and a lot more weeks to work on becoming a consistent and profitable trader. Remember the quote, have belief in what you see, not what you want to see. Continue to trust the process. Bye-bye for now.